Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Person. So, on this particular episode, we'll be talking about the top market events currently impacting various global assets. And these basically includes the forex markets for the major currency pairs. This also includes the major stock market indices, commodities such as gold and oil, as we prepare to be trading for the day. So if you have any questions arising due to the presentation, feel free to raise them in the comment section. And as always, this particular session does not constitute of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get started right away. We'll be looking at the economic calendar to try and understand the top market events currently happening today. So first things first, we had retail sales data coming in from Australia, which missed expectations. So in the prior month, that is in the month of December, the retail sales were up 0.8% in Australia, which missed expectations of 1%, but were slightly higher than the previous reading of 0.5%, which was revised downwards from 0.6%. So the goods trade balance improved better than expected, 7.08 billion Australian dollars. This was better than the expected 5.62 and also better than the 5.67 billion Australian dollars reported in the previous month. So as for Chinese inflation report, we saw CPI being up 0.1%. This was as expected, and of course, in the previous reading, it was up 0.2%. So we'll be looking at the other economic calendar for a much detailed outcome for the Chinese inflation outcome. So just give me a sec. So on this other side, you can see the month-over-month outcome. So in the previous reading, there was a deflation of 0.6%. That was in the month of November, meaning that prices on the month literally went down by 0.6%. But then in the month of December, the basket of consumer products did not change. So there was 0.0% change. And this was as expected, or the consensus was basically the same. So producer price index year over year in China was down negative 2.3%. This was a slight improvement from the previous drop of negative 2.5%, but also within the consensus estimates. So this means that the future or oncoming inflation is indicating that prices might continue reducing in China, and with China facing deflation, then we could be seeing much more action from the People's Bank of China going ahead. And of course, this is going to have a huge impact on the Chinese yuan and at the same time on oil prices. So outside of that, I don't think we have any major news happening for the rest of the day. Of course, we have the 30-year bond auction from Japan, which was undersubscribed at 2.3. This compared to the previous of 2.29 bond to cover ratio. You can see that it's slightly improving, but the numbers are still significantly low, basically indicating the big sell-off that is happening in the bond markets world over, with the UK and the US leading the curve. So for the rest of the day, we'll be getting the retail sales data at 1 p.m. for the Eurozone, where we're expecting a 0.3% increase versus a 0.5% drop in the prior month. Then for the rest of the day, we'll be having 5 different speeches from Fed members. 4 from Fed members and 1 from UK's MPC member. So FOMC member Hacker, Barkin, Smith, and Bauman will be speaking later in the day. Of course, that is bound to contribute much into the outlook of the US monetary policy, and this has the potential to cause some good volatility in the markets. So that being said, we'll also be looking at the top highlight events that we're expecting for the day. We'll be looking at what's moving the markets, and once we cover that, we'll jump into technical analysis to try and understand the current price movement. So good morning, Risley. Thank you for joining. Good morning, Smith FX. All Sports TV, thank you for joining. And Wangari Patrick, thank you for joining. So let's get to the next part of the presentation where we cover other major news impacting the markets. So one key highlight, and this is what a lot of traders and investors are focusing on, is the yield on US Treasuries, which has been rising rapidly, and now it's very close to the high that we experienced in the year 2008. So in this case, if you look at the US 10-year bond yield for the last 5 years, the highest level we have seen was on October 16, 2023, where it reached a high of 4.89%. And now the current yield on the 10-year is 4.688, basically indicating that bond yields are really rising. And as we all know, there's an inverse relationship between bond yields and bond prices. So when a lot of investors are buying bonds, then the value of the bonds goes up, but then the yield on the same bonds tend to go down. So the opposite is also true. Now that there's a big sell-off of US Treasuries, the yields are moving the inverse direction. And this explains why we are seeing extremely high yields on US Treasuries. So if you look at the data, let's say for the past 25 years, then the last time we saw this happening in the markets was all the way back in the year 2007. So this basically brings in a red alert that the markets could be facing some uncertainty or risks similar to the risks that the markets were experiencing in the year 2007. And this has been quite a worry, and this may explain why we are seeing US equities going down, especially for the SP 500, the NASDAQ, and the Dow Jones. They have not particularly performed well in the first week of 2025. So also, if you look at the dollar index and how it was performing the last time in October 2023, when bond yields were close to 5%, then you can see that there was a very strong rally in the dollar index, but immediately there was a change and bond yields started going down. Then we also saw the prices changing direction here. So the dollar index started going down as the bond yields started going down. So far they haven't changed direction, and it's quite a concern in the markets. So also a similar thing in 2007, it was the same thing. So as the bond yields started going down, then we also saw the dollar index starting to go down. So this basically means that there's a strong likelihood that if the bond yields keep going up, then the dollar index will continue going up. And if they change direction, then we could be seeing the dollar index starting to weaken. So outside of that, there is the issue of fires that have blazed LA. And don't know if I was sharing the page. So this is the page I was sharing on TradingView, where the last time we saw bond yields trading above 5% was in October 2023. So when bond yields changed direction, also the dollar index changed direction and started going down. And now fast forward to the news that are currently happening in the US. There was a big fire burning across the LA in California. So new wildfire sweeps through Hollywood Hills and threatens landmarks as chaos grips LA. So at least 5 wildfires are now raging across Los Angeles and its neighboring Ventura County. All but one are completely uncontained. So it's utter chaos in Hollywood streets as gridlocked and people carry whatever belongings they can under a blanket of thick smoke. Our reporter Crystal Hayes writes. So a fire chief tells the BBC the Hollywood Hills blaze is rapidly expanding with zero chance of containing it. Paris Hilton is among the earliest stars describing the heartbeat of losing their homes. So 5 people are already confirmed dead, sadly, and more than 137,000 people have been evacuated in what has become the most destructive wildfire in LA's history. So, of course, on the stock market, we could be seeing some reaction on this, especially for the companies that are majorly invested around the area. So we'll be watching this closely as we get more updates for the day. So on our note, still on the bond market issue, bond market sell-off jolts global investors as Trump worries grow. So the US 10-year Treasury yields hit the highest since April. The UK 10-year gilt yields at the highest since the year 2008, and bonds sell-off repos into currencies and stocks. So right now, what we are seeing as the activity in currencies as well as stocks is majorly as a result of the sell-off that is happening in the bonds market. So a sharp sell-off in the world's biggest government bond markets and a continued rise in the dollar sent shockwaves through financial markets, with pain seen deepening as uncertainty grows over US President-elect Donald Trump's policies. So on Wednesday, the 10-year Treasury yield, underpinning trillions of dollars in daily global transactions, jumped over 4.7% to the highest since April, and UK peers hit the highest levels since the year 2008. So yields rise when bond prices fall. There was no obvious trigger for the latest wave of heavy selling. Germany's 10-year bond yield touched a more than 5-month high amid accelerating Eurozone inflation and elevated bond supply. The yield, the Eurozone benchmark, was up nearly 4 basis points to 2.524% at the end of Wednesday. So also in Japan, the 10-year benchmark hit a 13.5-year high of 1.185% in morning trade in Asia on Thursday. So the moves unleashed a fresh wave of selling in currencies against the greenback, especially for sterling, which slid more than 1% before slightly recovering, and the euro, which was headed closer towards the $1 mark. So the overall result of this is the dollar strengthening and other currencies weakening. So while countries like the UK are really struggling with their fiscal budget and they might need to accelerate their tax hikes in order to meet their budget obligations, the major policy shift is that for the US, President Trump is looking to cut taxes, and that is providing some form of caution. So that with the promise of implementing tariffs on major trade partners is basically supporting the dollar. And of course, the high bond yields for US Treasuries is much better than the peers. So the overall outcome of this is the dollar strengthening and other currencies weakening against the dollar. So the SP 500, which rallied post-Trump's win, has recently started to falter, although it closed more or less flat on Wednesday. So Trump, in a press conference at Mar-a-Lago on Tuesday, described high U.S. interest rates despite the Federal Reserve being in the midst of an easing cycle. So he's not very comfortable with the U.S. interest rates right now, and he wants them to calm down. So inflation is continuing to rage, and interest rates are far too high, the president-elect said. So central banks all but declared victory over inflation in 2024, that's last year, but a number of metrics show price pressures are rising again. Trump's plans for higher trade tariffs, tax cuts, and deregulation threaten to push up inflation and strain government finances, thereby also limiting the Federal Reserve's scope to cut interest rates. So as we speak right now, we are seeing this being a major threat in the markets. And if the bond sell-off continues, then we could be seeing other currencies continuing to weaken against the US dollar. So far, as the year has progressed, the strongest currency has emerged as the US dollar since the year started, with the weakest currency in the market right now being the GBP, which is down 1.87%, with the majority of the big drop happening just yesterday. So the euro is the second as the weakest currency, with a 0.55% drop against the dollar, the yen down 0.53%, and so on. So currently the dollar is pretty strong, and we'll be following more updates to see whether this sell-off in the bond markets continues and how to react to that. So on our news, Fed officials fretted about likely effects of Trump trade and immigration policies So of course we had the FOMC sorry for that. We had the FOMC minutes coming up yesterday, and there was a lot to share on what the Fed officials thought about oncoming monetary policy. So almost all Federal Reserve officials agreed in their last meeting that upside risks to the inflation outlook had increased, due in part to the likely effects of expected changes in trade and immigration policies, according to meeting minutes released on Wednesday. So clearly, the Fed officials are not very confident that inflation is moving considerably towards 2%. And now they are basically considering the upside risks to inflation outlook, which had increased, and mostly because they expect that the policies implemented by Trump could increase inflation in the near future. So remember, the official inauguration of the US president will be on the 20th of this month. That's about 11 days from today. So Fed officials approved a 25 basis point interest rate cut at that December meeting, but it was clear from the minutes that many who signed off on those cuts still had concerns about the path of inflation in the near future. So on other news, Biden to further limit Nvidia AI chip exports in final push. So in this case, this was news released yesterday. So President Joe Biden's administration plans one additional round of restrictions on the export of AI chips from the likes of Nvidia Corporation just days before leaving office, a final push in his effort to keep advanced technologies out of the hands of China as well as Russia. So the US wants to curb the sale of AI chips in data centers on both a country and company basis, with the goal of concentrating AI development in friendly nations and getting businesses around the world to align with American standards, according to people familiar with the matter. So after this announcement, we had a drop in Nvidia shares. So we'll be observing the Nvidia shares later in the markets today to see how it reacts to that. So outside of that, back to the UK. So MPs vote against a recall for new grooming gangs inquiry. So this follows a wide-scale Elon Musk campaign to have these grooming gangs investigated in the UK, which led to a parliamentary vote. So an attempt by the Conservatives to have the government set up a national inquiry into grooming gangs have been voted down by 364 votes to 111 votes, a margin of 253, meaning that a majority of the UK Parliament voted not to have the national inquiry happen. So the amendment was attached to the Children's Wellbeing and Schools Bill, which would have been killed had the vote passed. So earlier in the day, Conservative leader Kemi Badenoch argued the government risks fueling accusations of a cover-up by refusing an inquiry. But Prime Minister Keir Starmer argued that several inquiries had already been held into abuse carried out by gangs of men, and a new probe would only delay the actions the victims wanted. So the amendment was largely symbolic, as the size Labour's majority meant it was never likely to pass. It would also have killed a major piece of government legislation. The Children's Wellbeing and Schools Bill includes measures aimed at protecting children and tougher rules around homeschooling, as well as changes to academies. So outside of that, pound falls as borrowing costs hit highest since 2008. So the pound has fallen to its lowest level for 9 months after UK government borrowing costs continued to rise. So the drop came as UK 10-year borrowing costs surged to the highest level since the 2008 financial crisis, when bank borrowing almost ground to a halt. So economists have warned that the rising costs could lead to further tax rises or cuts to spending plans as the government tries to meet its self-imposed borrowing target. So according to several media reports, a spokesperson of the Treasury said, no one should be under any doubt that meeting the fiscal rules is non-negotiable, and the government will have an iron grip on the public finances, meaning that the Treasury is very confident that tax hikes will be implemented, and this is not very positive for the UK economy, and that may explain why we are seeing a much weaker pound, or the pound being one of the weakest currencies in the markets right now. So that being said, I believe we have covered a majority of the major highlights that are currently impacting the markets today. So now we can narrow down and do some technical analysis to understand where the markets might be headed next. So we can already see there's a request to check on USD CHF. We'll be checking on that shortly. Thank you, Lucy. From Melvin, live from Meru University. Thank you for joining. GBP is notably weak. What is leading to this weakness? I think we have covered that. Thank you, Angari. Hello, Willibet, and thank you for joining. So let's jump straight into some technical analysis to understand where the markets might be headed next. So I'll be starting with the dollar index. The dollar index has been pretty strong in the last 2 days, and today being the third straight day where we are seeing the dollar index continuing to push higher. These always signals further strength in the dollar as the bond market continues in the dumpster fire. So in this case, with a much stronger dollar index, then you'll be seeing other currencies moving in the opposite direction. So in this case, we have seen the dollar being pretty strong, dollar index, and now the dollar against the Swiss franc continues to push even higher, and now is currently testing a key resistance area. And there's a good likelihood that this push might continue today. And we see the dollar trading past the 0.91371 price level as the strong bullish momentum continues for the 5th week in a row. So Bitcoin is something we had discussed. There was some consolidation. There was an overall expectation of further momentum upwards. But following the strong dollar, also Bitcoin gave back some gains. And from what we are seeing here, for the last 2 days, Bitcoin has lost about 8.87%. And this seems to be continuing as the dollar continues being really strong. Of course, we will be observing some key level support areas. Of course, in the most recent drop, we saw Bitcoin bouncing around 91.5. So we could be seeing the price of Bitcoin extending the drop to around 91.5 before we start looking for opportunities to buy back in. But for now, the momentum seems to be strongly bearish. So on the other hand, for gold, despite the dollar being strong, gold continues to be pushing higher as China has doubled down on buying even more gold for its central bank. So far, I remember when we were doing the analysis here on Monday, we expected gold to retest the previous high here at 26.64. So it slightly missed the target, but got really close, pulled back, and then hit the target the following day. That was yesterday. And today, now it's an attempt to break past this resistance area and push for the next resistance level. And that's likely to be all the way up to around 27.18. So we could be seeing the price making a push for 27.18 through to the end of this week or even early next week. But then the idea is to observe whether there is a clean break above 26.64 to confirm the buyers on a potential bullish trade. So as for currencies, what we are seeing with Euro USD, it's a big sell-off. So on Monday, we were testing the theory whether the market would be breaking this particular resistance around this area here. So the market retested this area and eventually made a big drop and then continued pushing lower. And now the idea of parity is more and more becoming real. Parity is the price level where €1 is equals to 1 USD. So that could be a likely outcome in the near future if the euro continues being weak against the dollar. So potentially the price dropping to 1.000. So in this case, a potential drop to this area could be on the cards if the dollar remains strong. And of course, what we are seeing here is the same theory being played out. So from this particular resistance trend line, market attempted to move higher, failed, and got right back in. So for the short-term targets, if you're looking to be shorting the euro, I believe the previous low of last week at 1.02244 could be a nice target, considering the strength of the dollar and how we are seeing a continuation of the same playing out. So pound, which has been the weakest currency since the year started, has been having some very sharp drops. Of course, it's currently attempting to break below the previous low. So the previous low that we saw here was on April last year. And now, looking at the price action on the 4-hour chart, it seems like the market is looking to accelerate, but then perhaps one more retest before moving further downwards. So if you're looking to sell a currency, it's not usually best to sell when the price is low. So sometimes you have to be patient, wait for the price to move higher before you identify an entry to go for another short selling trade. So for now, from the 4-hour chart and what we are seeing, it seems more likely that the pound might continue losing to the dollar. But if you zoom out on the 4-hour chart, on the daily chart, then you can see the potential trade levels that we might be headed for next. So in the previous lows, we saw 1.207, and now the market is attempting to push for that. So for now, yes, it's a falling knife, so not the best time to be looking for a buy trade unless we have some evidence of that. So for now, this pullback, especially on the 15 minutes, it's indicating some form of recovery. So remember, we have yesterday's low here. So potentially, we could be seeing the market pushing for that area. And then from there, perhaps we see a continuation. So it's a very familiar pattern where the market breaks a low, goes back, retests, and then continues in the same direction. So this might be a likely trading idea for the UK pound traders. So the pound is also losing to the yen. So yes, we were expecting this strong recovery to be playing out. So the market didn't quite get to the target, but then reversed. So yesterday, the market continued pushing down. Today, this morning, it has pushed even lower. And now we are looking at this potential level being retested. So market broke a major support area, is retesting, and could potentially move in the same direction as we continue seeing a very weak pound in the markets. So this idea of the market moving higher is no longer tenable, and now we are looking at a potential sell-off of the pound against the yen, perhaps even moving to retest the 188 price level. So our USD has been pretty resilient. So despite the strong dollar, we haven't had a major break of key support areas. So in this case, you can already see the market finding some very strong support here. So there's a likelihood we could be seeing the Australian dollar making a strong recovery. So though it may not be that significant, we could be seeing the market going for this area here and currently retesting this area, especially given the correlation between the Australian dollar and gold, which is quite positive. So we could be seeing the market heading even higher, or even perhaps testing the days open, given the current bullish momentum we are seeing in gold. So USDN, we expected a drop, didn't quite complete. So with the current dollar strength we are seeing, then the chances are that the market breaks out of this range and continues moving higher, given the strength of the dollar in the markets. So there's still more room for upside, with a potential previous high being tested at the 160 price level. So we could be seeing some further upside potential playing out on USD yen from this area towards around 160.2, especially if we see more volume coming in, especially during the New York Open. So Nikkei 225 index continues to have this sell-off, and of course, the previous support, as we had identified on Monday, is 39,187. So we continue expecting further downside momentum towards this price action level. So Brent oil, we had expected a big drop here on Monday. This did not play out. We had some further rally and the price kept going up. Then on Tuesday, we erased all the mandate gains and the market got right back downwards. And now it seems like we are getting into some form of consolidation. But then the US stockpiles of oil are on view right now. So from what we are seeing here on the forward chart is a market that is really rejecting higher prices. On the daily time frame, the candlestick was pretty significant, indicating a rejection of higher prices. So from the 1 hour chart, this could be a retest of the same. So if we really look at the chart and try to understand what's happening here, it's a market that was significantly forming higher highs and then also forming significantly lower lows. But then today there was an attempt to break towards the lowest potential break around this area here. And if we see price moving down, then the idea would be to go for a short selling position towards $74.3 per barrel, especially if we continue to see a confirmation of more sellers coming in. However, the sell-off yesterday in the afternoon was pretty significant, so we could be seeing some further downside momentum today. So as for US equities, we failed to see further upside momentum. It was a big surprise. The year had started pretty well with a very strong momentum, but then now we are seeing the market erasing those gains following the newfound fears from the bond markets. So now the expectation is that the stock market continues to drop unless there's a change in what's happening with the bond market sell-off. So perhaps some further downside momentum for the Nasdaq to 20,822. Also, for the Dow, we had expected that the market would move downwards and perhaps bounce from this trend line, which is what happened yesterday in the evening. But then also the chances of the market now moving higher are getting dimmer and dimmer. So I wouldn't be very optimistic on the market making an impressive recovery today, unless we have any major news. And of course, we have the non-farm payrolls tomorrow. So for now, I'd be observing this price action level of yesterday's high with a potential drop playing out around this area here. So for now, for the short run, market retest the yesterday's high, but then the potential is that the market drops from there onwards. So US 500, also the same thing. So we had expected a nice rally, but then with what we observed, we are seeing a very strong dollar, very weak bond market, and yields rising rapidly. So from what we have experienced over the past couple of days, it's a very strong volatility, especially yesterday's New York session was very volatile, but the idea is that the market is still weakening, and we could be seeing some further downside momentum following this path here, and potentially the market going back to retest the area. Of course, from the 1 hour chart, this is how it looks like. So to complete this swing, we would have to see the market going towards this price action area, and this is around 5,851. So I hope I've comprehensively covered everything. Of course, we have New Zealand USD clearly attempting to break towards the lower side failing, attempting to break towards the upper side failing. And now the newfound support area is around this area here. And now it seems like the market is bouncing from that area again. So in this case, for New Zealand USD, which has been a pretty strong currency, then we should be seeing some strong bounce, perhaps just retesting the day's open or the day's high, which is around 0.56124. So that's it for the day. I'll be checking on the questions to see if there is anything we missed. Happy New Year to Dak. Thank you for joining. Hello to the banks. Thank you for joining. Based on this week's non-farm payroll, on to next week and the month and quarter, will the results drive market buyers and sentiment onwards? I believe the biggest thing driving the markets today is the bonds market. So if the bonds market continue with the sell-off and bond yields continue rising, then there will be nothing more important than that in the markets. However, the non-farm payrolls have the potential of shaping sentiment. So if we have a very strong non-farm payrolls report, meaning that the US economy created more jobs than expected in the month of December, then that would likely cause panic in the markets, because a very strong economy with rising inflation is not very conducive for further rate cuts. However, if the economy is weakening and the job market is weakening, then in that case, we could be seeing further rate cuts. So in this case, a very strong job market report would basically cause the Fed to pause on the rate cuts. And of course, we know how that plays out. So in that case, we should be expecting some relief in the dollar rally. And in case we see lesser than expected report, then the dollar rally continues. There's a question to check on EURAUD. I'll be checking on that. I don't think there's a major change. Haven't checked on the US holiday. So it doesn't make sense. There's no US bank holiday today. So hello Smith, hello Peter Kihenjo. So last request here is on checking on EURAUD. Don't know if I have that open. So just checking. So this is the euro trading against the Australian dollar. So starting from a much bigger time frame, this is the daily time frame. What we are seeing here is a market that is making some major swings, with the most recent swing being from this particular point. Sorry. And moving all the way up, and then finding resistance in the market, pulling back downwards. So from the forward chart, you can see it's 5 consecutive weeks of bullish momentum. Then the following week, a bearish momentum, and then we can also see that there was a recent area acting as support as well as previous resistance standing to support. So after the 1 week sell-off, it seems to be finding some good support here. So now in this case, we are seeing the euro finding some form of support and really struggling to move higher. So in this case, what I'm observing in this chart is more like an ascending triangle. This seems to be the prevailing market pattern, which implies that there is a very strong resistance around this price action level. So every time the market has attempted to break above this particular resistance at 1.66512, it seems to be finding resistance, and the same thing seems to be playing out. So the market is still within formation, so perhaps a very short-term momentum backwards, but the real opportunity will be happening on the break once the market breaks out of this particular formation. So can you explain how to trade breakouts using volume and momentum candlesticks? I think we have done an episode on this on the channel. So kindly search for the volume and momentum candlesticks episode on the FX Pesa YouTube channel. We have already covered that. So the thing is, if you're trading spot forex, then there's no indication for volume because it's an over-the-counter market. So you might have to use an alternative indicator to find some sense of volume, perhaps from a third party, but there's no single MT4, MT5 indicator that will give you accurate volume. However, if you're using a commitment of traders report, that might work well for the futures markets. Let's say you're trading the Euro USD futures, then you compare that with the volume, that will play out, but for the spot market is a bit different. So thanks, Mona Bastol. I can see LFTJ. Check the BTC retest. I already covered this at the beginning of the session. Of course, I mentioned the 91.5 price action level. So where is that? Yeah, so we talked about pullback all the way to around 91.517, given the strong momentum and the strength of the dollar for this week. So this seems to be a likely area, which has already been tested 3 times. So with the momentum downwards, it seems like the BTC price will be headed for 91.5 before we start looking for opportunities on the bounce. So thank you, Melvin. Thank you, Tony Dark. Thank you, everyone. So remember to like and share the video. And also, we have a new episode of the Bullish Banter podcast available on YouTube as well as all other podcast platforms. And also a notification that if you're a trader operating from Eldoret, then we'll be having a session later in this month around the 24th. So make the necessary preparations and check our socials to book your seat. So thank you, everyone, and I hope to see you on the next one.